Hi, how's everybody doing today? This is Rich from Rich TV Live with our very special guest. It's John Arbuthnot, the CEO of Delta 9 Cannabis. How you doing today, John?
Very well, Rich. How about yourself?
I'm doing very well. Congratulations on having a very strong day in the market today. I see you guys are up nicely. How you feeling about that?
Well, nice to see the market starting to correct here, at least over the last few days. All experienced over the last number of months. So certainly going to take it as positive.
Absolutely. Absolutely. Well, let's get right into it and talk a little bit about Delta 9 Cannabis, this really impressive company that you are building. The company recently posted its Q3 2019 results. Can you lead us through the developments for the company over the past quarter?
Yeah, absolutely. So, from our side, big focus has been on production and distribution facility expansion. Of course, all of this is based around our proprietary growing methodology, which we call the Grow Pod. It's a smaller scale and modular growth um, strategy where we retrofit shipping containers into state-of-the-art growing areas. Currently have 202 of those areas under license by Health Canada. It gives us an annualized output capacity of about 5,300 kilos as of today. We note as well that we currently have another 95 of these grow pods that are pending Health Canada approval. They've already been installed within our facilities. That will take our production capacity up to about 8,500 kilos per year once those are approved. So all of that CapEx is already deployed. From there, we continue that modular growth strategy, continuing to build out these proprietary grow pods. And obviously, we'll update the market, as soon as we have those expansion approvals from Health Canada in hand. From there, and when we've always said, as we build our overall production capacity and increase our pipeline in terms of our number of products that we have that we're bringing to market, we will, of course, be looking for new distribution markets. We took a phased approach, really just focused on our home market here in the province of Manitoba. As of end of last year, since then, we've started our expansion west. We're now in Manitoba, Saskatchewan, Alberta. More recently, we brought on the province of British Columbia as well. So we've completed our trek west. We're in active discussions with Ontario, Quebec, Newfoundland, and other provinces on our beginning our push east. Again, as we continue to see that production capacity increase, we do envision ourselves as a national distributor. Of course, we're vertically integrated as well. We saw a very strong quarter from our retail unit. We actually opened our fourth retail store in the province of Manitoba within the quarter, although we note as well this was only with about 4 days left in the quarter. So, we'll get into some of the revenue segmentation and the numbers from retail, but very strong revenues from the retail unit, a strong expansion there, and most of that on the back of same store sales. So that the cannabis consumers are starting to really adopt the legal framework. They're coming into the stores more frequently and purchasing more product, which is great. We've also announced an acquisition or planned acquisition of two cannabis retail stores in the province of Alberta within the quarter. So we will start our expansion into other provincial markets. Again, we maintain our vision that we see ourselves as a vertically integrated cannabis company and building a chain of Delta 9 branded retail stores across Western Canada. Of course, we have a business to business segment as well, and we'll get into some of the revenue segmentation on sales of our proprietary growing technology to other licensed and pre-licensed companies, sale of cannabis genetics, consulting services, etc., to kind of round out that diversified offering that the company has. But that's a very high level in terms of what's been going on at Delta 9 over the last quarter.
Congratulations on opening up those four stores. And how many stores does that give you now total?
That's four stores operating in total now.
Okay, very good. So congratulations on the growth and the four stores. You guys are also up 15% right now as we speak. The market is absolutely bullish right now. So I think it's been 8 long months of red, and I think we've officially found the bottom. I think it's pretty clear. The last 2 days, we've seen huge jump in the cannabis sector. Now, any other noteworthy catalysts during the quarter that we can talk about?
Well, I guess we'll note that Rich TV is calling the bottom here as of today. But no, I mean other notable catalysts for us, and it unfortunately these catalysts sometimes come in a down market, so perhaps don't get the attention that they otherwise should. But during the quarter as well, the third quarter, we changed our stock symbol from NINE, our original ticker, to DN. Really, this was just procedural. It allowed us to facilitate listing of a new tranche of warrants and debentures, which were issued. We'll speak on the debentures in a moment. Kind of round out our offering, allow for our debenture holders to see those bonds free trading in the market, as well. And as a part of that, we were forward looking towards an uplisting. So we as well secured within the third quarter an uplisting to the main board TSX. We had walked through about a 6-month process with them to ensure that we had ticked all the boxes in terms of strength of the balance sheet, revenue, governance, et cetera, to secure that uplisting. Really, I think it demonstrates the maturity and the stage of growth for the company, that now we are at that phase where we can be a main board listed company on the TSX and on Canada's senior exchange. So both I consider to be very positive catalysts for the company during the quarter.
Congratulations on your listing to the exchange. And the company undertook a few financing activities during the quarter. Can you lead us through this?
Yeah, absolutely. So we ended the second quarter this year, period ending June, with about 15 million in working capital, but only about 3 million in cash. Obviously from there we undertake financing to ensure the health of the balance sheet, that we remain adequately capitalized for our continued expansion activities. First and foremost was a debenture offering in the market, which we mentioned. So closed 11.8 million through issuance of a debenture in July this year. Gross proceeds for the company about 10.5 million from that offering. They bear an interest rate of about 8.5% on a 3-year maturity, and convert into shares in Delta 9 at about $1.21 in terms of that conversion price. I mentioned as well that those bonds are listed under dn.db, so there's an opportunity for investors to see exposure to the debt side of our company as well. Secondly, from there, we went back to Canadian Western Bank, who's our main banking partner, increased our existing credit facility from 12 million to 18.1 million. And that's in doing business with the bank for less than 1 year. So, it's one of the few operators in the Canadian space that has access to conventional lending facilities. Obviously, that goes a long way for the company in terms of decreasing the cost of capital, accessing non-dilutive capital. And I think anytime you have a charter bank providing access to credit, access to capital, should go a long way from an investor standpoint as well, to say, the bank has done a hard look at this company, has gone through all of those rigorous credit checks, and is credit worthy. So, we see that as, not only giving us access to non-dilutive capital, but at very favorable interest rates, but also an expression of faith and in terms of the financial health of the business. So, all told, where did that leave us as at the end of Q3? Well, end of September, company had over 10 million in cash on hand and over 23.5 million in working capital, as well as access to another 10 million plus through that credit facility. So company is very well capitalized, strong balance sheet, lots of working capital on hand, and access to additional capital, which in a down market, is absolutely where you want to be acting opportunistically where appropriate in terms of acquisitions or otherwise, but just continuing to push forward in spite of the negative market conditions over the past number of months.
Now, you touched on the balance sheet. How does it look at the end of Q3? Are you happy about where you guys are at? Or is the company comfortable? Is the company safe? There's a lot of people talking about companies going bankrupt, companies that are, in financial trouble. How does Delta 9 look right now at the end of Q3?
Yeah, so we're seeing a lot of companies that perhaps did these term notes or debenture offerings or otherwise, over the last 2 to 3 years. Those notes are now nearing maturity, very often out of the money from a conversion standpoint, and that's putting a lot of stress on these balance sheets, where these companies are either going to need to raise additional capital to pay off those bonds, or they're going to need to reprice the conversion, which can be unnecessarily, I think, painful for equity investors who are not expecting that level of dilution at today's stock prices. So, overall, it's certainly straining balance sheets in the sector. As well as a part of this cycle, we're seeing that for a lot of smaller issuers, particularly, they're not able to raise capital in today's environment. So that's causing a lot of people to rethink capital deployment, to rethink expansion, to really operate within their means. I think as that, shine that lens on Delta 9, what that really means is that, in the context of 23 plus million in working capital as of the end of quarter, over 10 million in cash, access to another 10 million in cash, obviously all of this is very positive for us.
Very good. So let's look at the operations side. Your management team is big on providing KPIs to investors. How did the operations side look this quarter?
Yes, I mean, we like to chat through every quarter, not only where we've really hit in the quarter, but where we've missed as well, provide investors transparency on our varying business units on how they're performing, to give people a sense of how are we executing on our business plan. Firstly, our production wholesale business, overall production was up about 29% over the previous quarter, so about 870 kilos produced in the quarter. That's up over 675 kilos in the previous quarter. So as we're bringing these production assets online, we're starting to see that trickle through into the overall production output numbers. Obviously very positive for us as that is our core business. Direct production costs per gram continue to be industry leading, $1.08. It was up 3 cents over the previous quarter, but again, overall very strong. Puts us in an industry leading category on cost production. I believe we're third or fourth amongst all of the licensed producers in that production cost per gram. So again, we see that as very positive. Total grams sold for the quarter was up about 4% in our wholesale unit, although we do note that our average selling price per gram was down about 25%. So down to about 419 from 563. A lot of analysts asking for some insight as to why the price declined. I mean, obviously we're seeing a more competitive market environment from a production and wholesale perspective. We have seen, I think, an insufficient number of retail stores operating nationwide, which really drives the demand curve for our production and wholesale business. So, we would echo a lot of the very well-published concerns on the industry right now that the overall number of retail stores has not quite been there. As well, we do have two tranches to our wholesale business. So one is the consumer packaged goods products, and one is bulk wholesale products sold to other license holders for either further processing or extraction. And while we did see more of our product going into that bulk wholesale, which drags down average prices, our average price per gram in our consumer packaged goods segment was still $5.20 a gram. So that was almost in line with last quarter. So, again, as we continue to ramp up our production, we see more of it going towards the consumer packaged goods products. Feel that we're well positioned as a low-cost producer to still see adequate margin in our wholesale business. Retail, I think, was the real shining star for us in the segment or in the quarter. 349,000 grams sold. That was up about 24% from the previous quarter. Average selling price was in line at $12.47 a gram.
Wow.
So seeing very strong sell-through in the retail, even at fairly high average retail pricing. Total number of transactions up 28%, and average cart size was very consistent. And again, we mentioned that while we opened our fourth store in the quarter, much of this growth was just same-store sales and really seeing an uptick and in the number of consumers coming through the stores, more transactions, and more overall grams purchased. So all of that very positive from a KPI perspective for our retail segment.
How did the financials stack up versus the previous year and the last quarter?
And so, I mean, first we talk revenue segmentation, give people a sense of, how those three core business units are actually performing. And, we mentioned the wholesale number of grams sold was up, although average selling price down. And this actually led our wholesale unit, much like many of the other producers, to have a little step back in the quarter. Wholesale revenue about $2.2 million, It was down about 23%. That was more than offset by the uptick in our retail division at 4.35 million, up from 3.5 million in the previous quarter. So again, strong growth from the retail segment, offsetting some of the step back from our production and wholesale division. It was our business to business segment where we saw a real miss in the quarter, 222,000 in revenue, down from 2.1 million. So really for us, and to analyst questions, it's a timing issue. These are larger infrastructure projects that can take anywhere from 6 months to 12 months to actually see revenue recognition, which comes at substantial completion. So, we are guiding people that we have a number of projects in the pipeline right now, over a dozen of these infrastructure projects and facilities that we're building out across the country. I think as we continue to ramp that business unit up, keep in mind we did less than 1 million in top line revenue from that segment last year. We've done over 3 million so far this calendar year. As that unit continues to grow, we should see less quarter over quarter volatility from a revenue recognition standpoint. In terms of total top line, our net revenue about 6.6 million. That was down from 8.8 million in the previous quarter. But again, looking to give investors a good sense of where were the hits and misses amongst those varying business segments. So go ahead, Rich.
So right now we are in a point where we're very close to edibles legalization. What is your guys' plan for edibles? You guys plan to be a big part of that?
Yeah, so a few different parts of the strategy. Obviously, given we're vertically integrated as a retailer, we'll be carrying the full host of products from the industry-leading manufacturers. Really, we're looking to take a little bit of the shotgun approach here. We don't know what the largest impact categories will be. My thesis is really that the vape pens, the vape cartridges, are going to bring just a convenience and discretion factor to the market that's going to be very attractive for consumers. From the pricing we're seeing, this is comparably priced versus what equivalent black market products would be. So there should be a strong value proposition in those products. But will be very interesting to see, what is it edibles, is it topicals, is it drinkables? What's really having an impact with the consumer. We'll know a lot more, I think, by the end of Q1 next year, what the high impact categories are in Cannabis 2.0. And as a producer and wholesaler, our focus is going to be on a few lines of dried extract products as well as the vape pens. So that'll be our focus, at least for this initial launch here. Our vape pens are slated to hit store shelves January 5th, so just into the next quarter, while our dried extract may be in stores by the end of this year. We're still trying to work out some of the mechanics of how do we get our products to stores in mid-December, our provincial markets ready to act quickly before the Christmas or holiday season, or are we out into January for some of these deliveries? But, very certainly will have a material impact for a lot of producers in the sector, I think, into Q1 next year.
I have a question from the audience from Pete Ferraro. What are the revenue projections for 2020?
Good question. Unfortunately, we don't provide forward guidance to the market. We find the industry is still, so novel that it's difficult to project, on the top line. I think generally what we would look to do is to point to some of the revenue growth that we have achieved over the last year in financial results as kind of the guiding metric for investors on a moving forward basis. So company over the last, first 9 months of this year has produced a little over 21 million in top line revenue. We're generally trending towards profitability. Gross profit is increasing almost quarter over quarter. We've also been able to, and we would highlight the decrease in operating expenses. So operating expenses have come down sequentially in each of the last 3 quarters. We were one of the first producers or capital markets participants in cannabis to take a hard look at the operating expense line, really try and right size that to the growth of the business, make sure that we're driving towards profitability. We really wanted to show investors that there's a clear path and trajectory towards profitability. Net loss or loss from operations for this quarter, Q3, was only 660,000. That was down from a little over 1 million in the previous quarter. And the adjusted EBITDA loss was about 800,000. So we were on the cusp I would say, of that break even point towards profitability. That continues to be our push as we move forward. But really for us, what investors can look forward to in terms of top line growth is continuing to increase that production output capacity. Again, we're 875 kilos last quarter, but moving towards a production output capacity on an annualized basis of upwards of 8,000 kilos. So there's a lot of room for growth in the production and wholesale side of our business. As we look at retail, it'll be continuing to open retail stores in the next calendar year to really drive the distribution and the top line growth for us. So I think investors can look forward to that. They've seen the execution from management over the last 12 months. You plot that forward, and we'll continue to look to provide guidance wherever we can to the market on forward-looking expectations.
That sounds great. Now, I have a question here from one of our members, and I don't know if this is true or not. He's saying that he believes that he saw a Delta 9 brand at Trulieve. Is it so? If so, can you talk about the relationship? Is there a relation?
That'd be in the U.S.?
Yeah, correct.
Yeah, no, there's no direct affiliation.
Okay.
There is one company, I believe, out of California that's producing Delta 9 branded extract products.
Okay.
Unfortunately, we can't participate in the U.S. markets quite yet as a TSX main board listed company. But, obviously, we were chatting a little bit earlier about some of the recent developments in the U.S. It's obviously an exciting market. I think, every executive team has their war room put together for just what it means when there is federal legalization in the U.S. It would obviously be an exciting or more than exciting market catalyst to be able to get down into the largest market in the world as a main board TSX listed company, and bring together our ability to raise capital in the Canadian Senior Exchange with the market opportunity presented by the rollout of federal legalization in the U.S. So it's happening at some point in the next few years. It'll just be a matter of time.
Yeah, and that brings me to the next question. What do you think about the MORE Act passing? What's your opinion on that? Is that something that everybody's talking about in the cannabis sector in Canada? Is that more of an American thing? Does that obviously it has an effect on the whole sector. We see that today. But as a CEO in the cannabis sector, is this like big news that everyone's talking about? Is this what everyone's been waiting for? Is this more of an American thing? Love to know your opinion on that.
Well, I think this started with the Safe Banking Act moving through the House. I think it was a few weeks ago. Nice to see the timing that we're seeing these follow-on bills start to generate some traction, at least through the House or the House committees over the following weeks. From there, I see this as really first steps. I mean, obviously, we're not there yet. Neither of those bills has passed through the Senate. But my thesis has always been that when Canada announced that we would be legalizing federally, if you looked out 5 to 10 years beyond that, you would see a whole host of developed nations start to adopt federal legalization. Whether it's, we've already seen Mexico start to take steps. We're seeing medical markets open up around the globe, and to start to see these baby steps in the United States towards federal legalization. I mean, that to me is the real opportunity for investors who are bullish on the cannabis sector. It's not just what's happening in Canada today. It's not just the existing U.S. state over state markets. It's not the preliminary entry into some of these medical markets opening up globally. It's what happens when we see over 100 countries open up towards federal legalization and really global legalization of this product. We're talking a multi-billion-dollar a year market opportunity in a lot of these jurisdictions for companies that are well established to be bringing their brands, their business models to these other markets. And that's really my goal as CEO of Delta 9 is proof the business model here, prove it can be profitable. That vertically integrated model is a model that we can push out into any of these new markets as they start to open up.
I have another question for you. Now, it has been circulating today that the Ontario Cannabis Store, the OCS, is really putting out a mandate now, and they're putting it out there that they want to open up 1,000 stores in 2020. There's only 24 stores right now in Ontario. What would that mean for the sector and for the Canadian LPs if they were able to open up 1,000 stores next year?
I think it's hard to overstate how significant that will be for the market, and not just from a market catalyst standpoint, but from a from an actual operation standpoint. And, we see this even here in Manitoba. We open an additional store. Um, it's not stealing revenue from other stores throughout the province. It's all of this is incremental revenue. It's adding to the overall sales system wide. To take the Ontario market from 24 stores today, I think they're opening up to 75 or so stores in the next few months. But to take that and expand that by a factor of multiple over next calendar year, I mean, every store opening will drive demand into the market. I've seen as well recent announcements they're looking to move I'll call it out of the way in terms of the wholesale function, allowing for private business to step in there. I mean, all of these developments obviously incredibly positive for private business to be able to get in and operate and operate obviously in a regulated environment, but to be able to let the free market forces start to dictate supply and demand, to really blow open the demand curve for the entire sector by opening that number of retail stores. I can't overstate how significant that will be for our market into the next calendar year.
Yeah, and you touched on my next question I wanted to ask you, and I love being able to speak to industry insiders. Allowing Health Canada, allowing the private sector to do their distribution. This, to me, is huge. Health Canada is not in the business of distribution. So why are they trying to distribute? So yeah, they should be outsourcing that. Allow the people that are professional distributors to do their job. And that means customers will get their products faster, sooner, hopefully cheaper, less delays, less headaches, and less pressure on Health Canada.
Yeah, I mean, we see the challenges. Obviously, just operating in Western Canada, you look at a market like Saskatchewan, which is pure free market, where there are private business participants in the wholesale segment and retail segment. We can work with both of those types of groups. We can negotiate pricing, quantities. Deals can be done on a phone call, and the product shipped out later that afternoon. There's very little in terms of bureaucracy to work through to actually get our products through the market. And as you pointed to, that competitive or those competitive forces will help to drive down prices. It's good for the end consumer. It allows the market to work in the way that it's intended, versus some of the other markets where you see varying degrees of participation from crown corporations in a distribution function. And in a lot of cases, it's well intended or it's serving a tax collection function, but it's not operating the way that a free market should operate. So all of these very positive developments for Canada's largest market in Ontario. We've had our eye on it for some time, and I'm glad our production capacity is now getting to a point where we can enter the Ontario market into early next year in a very meaningful way.
That sounds fantastic. Now, if the cannabis sector keeps growing, then you're going to see, which we know it's going to keep growing, you're going to see more and more events. You're going to see more and more trade shows. I want to know your opinion on what Planet 13 is doing, because they're doing something really cool. I don't know if you're aware, but they're creating like a club for cannabis in Vegas, where you're going to be able to have like a pool, you're going to have a club, you're going to be able to go there, hang out with everybody else that loves cannabis, and just have a really cool, good time. Is that, in my opinion, where the direction of this cannabis sector is going? Is this going to be like the cool thing to do and like the fun thing to do? And are they going to create like amusement parks for cannabis, clubs for cannabis? Is this the direction where cannabis is going? And what do you think about that?
Well, I have been to the Planet 13 store in Vegas, although that was at least a few months ago. So I know they've done a lot of cool stuff since I've been there. It really is taking cannabis retail and putting it in a Vegas lens. What they're doing there, it's rather incredible to see. I mean, you walk into a Delta 9 store, here in Canada. Obviously we're still quite strictly regulated from a marketing standpoint. All of those things that we can do in store and out of store from a marketing or branding standpoint. I don't know that it's going to be the near future where we can start to do some of the things that Planet 13 is doing up here in Canada. But obviously exciting. I mean, as you said, it starts to put cannabis, in that framework where it's socialized, it's fun. We're removing stigma. People can just come into that environment and really have their eyes opened up as to what cannabis retail can be. This is not a back alley, knock on a door, have the slat open, and get your cannabis type of environment. This is real retail. It can span the full spectrum of anything from an Apple store like environment to a boutique type environment to a jewelry store type of environment. We can make these retail platforms really whatever you can think of. You can put it into retail and create that fun buying experience for the end consumer. And obviously, takes a little bit different flair when you put it in Vegas, but cool to see what they're doing down there nonetheless.
And what do you think about these cannabis awards? Did you go to that? Like, are you into that? And I'm also going to be at the Lift conference in Vancouver in January. Are you planning to go there as well?
Yeah, we will have a presence at the Lift conference. We always make it out to Vancouver, Toronto for the Lift events. They're I would say the largest or at least best attended events in the Canadian market. The Canadian Cannabis Awards, I think we're on a few weeks ago. Unfortunately, that one we did miss. Our executive team was tied up elsewhere for the awards. But, I would again point to that that's an industry maturing. I mean, think back 5 years to think that there was going to be industry awards shows was an abstract concept at best. And to now start to see these events that are really celebrating what's going on in the industry, celebrating the companies and the innovators and the researchers and things like that. Again, I think points to an industry that's starting to become very real.
Well, I will be at the Lift conference representing the media, so I will see you then in January. I look forward to it. Thank you very much for your time today. We wish you all the best of luck in your future endeavors. Keep up all the great work. Our entire community will be watching. I did have another question from one of the members that asked about extraction. Do you guys have an extraction partner you work with, or is there a preferred extraction company that you guys work with right now for extraction purposes?
Yeah, so we work with a few. We are licensed for oils production and sale on our existing site, but that's currently limited to just the ingestible oils.
Okay.
From a production standpoint, for distribution, it will allow us to distribute any oil products, but we have very limited capacity from a production standpoint. So that means partnership. We have a main partnership with Westleaf, based out of Calgary. They produce, right now, their focus is on the vape pens and a limited line of soft chew or gummies products for the rollout into this fall and early next year. So we're working with them on a white labeling agreement. We've agreed to purchase between 4 and 16 million worth of white labeled or Delta 9 branded extract products through the next calendar year. So that will be our main focus in terms of the Delta 9 branded products, bringing those through our facility in Winnipeg for distribution out into our provincial distribution markets. We also work closely with the Otcqx Cannabis Group and through their extraction facility in PEI, which produces a whole host of branded products that we're bringing to market late into this calendar year. So again, we're finding any gaps in our business model. We are working with some of the industry's leading extraction partners on making sure we have that full slate of products to offer to consumers into this year.
Well, thank you so much for your time today, John. I wish you all the best in your future endeavors. I look forward to seeing you at the Lift conference in January. And let's stay in touch. If there's any other big news or anything that we need to talk about, I'd love to have you back on the show. Our community will be watching very carefully, very closely. You guys are up right now 13%. Congratulations on the success today. And I hope you enjoyed the bull market.
Rich, thank you so much as always for having me on.
Always a pleasure. This is John Arbuthnot, the CEO of Delta 9 Cannabis, one of the youngest, if not the youngest, CEO in the cannabis sector. And as usual, very impressed, well-spoken, and operating a great company that's on the rise. Congratulations on all your success, and we look forward to future endeavors. Thank you, John.
Thank you. Cheers.